and welcome to The Bottom Line on TVP World. This is where we unpack some of the main business and economic stories of the day. I'm your host, Marie Cato. On Friday, an ounce of gold hit a historic peak of over $3.2 thousand. If you were fortunate enough to have invested in gold towards the end of last year or 2 or 3 years ago, you will undoubtedly be rather pleased. Why has the price of gold risen? Let's go to Jan Kennedy's report to find out more.
It's been an exceptional week for gold, as tariff turmoil pushed the price of the bullion to yet another record high. Since Wednesday, the price of an ounce of gold has surged by nearly $250, reaching $3.2 thousand on Friday afternoon, far surpassing market expectations.
Because it hasn't been economics that's been driving the gold price this year. It's been very much the reaction to the political announcements and decisions that have been taking place. Now, this obviously will have an economic impact later in the year, but already, as I say, gold has done better than we were expecting.
Amid ongoing global uncertainty, national banks worldwide have also been expanding their gold reserves. In 2024 alone, they grew by more than 1,000 tons, marking the third consecutive year of major purchases. But why have the national banks embarked on a gold buying spree?
Gold is often cited by experts as an asset that isn't someone else's liability. If we hold someone's bonds, they can refuse to repay us. If we hold another country's currency, even in cash, that currency might collapse or become unusable for some clients. Gold, on the other hand, is liquid. It holds intrinsic value, and it is not a liability. It's a rational and sound reserve.
And according to experts, this isn't the only reason.
Central banks may tend to somehow limit their exposure to dollar assets and instead put higher weight on their other assets, especially gold, which is still considered the safest class of assets that exists.
The National Bank of Poland led global gold purchases in 2024, adding 90 tons to its reserves. In March alone, it expanded them by another 16.5 tons, bringing the total to just under 500 tons, according to the Polish financial news portal Bankier.pl. Expanding national gold reserves has become a hallmark policy of the National Bank of Poland's Governor Adam Glapiński during his tenure since 2016.
It demonstrates the strength of the Polish economy, Polish resources, and Poland's solvency. It is our showcase asset in international transactions.
The National Bank of Poland began its first major gold purchase 2 years into his term, adding around 125 tons between 2018 and 2019. After a pause, the buying spree resumed 4 years later, and over the past 2 years alone, the NBP has acquired nearly half of its total reserves, purchasing 220 tons of gold. Gold currently accounts for 21% of the National Bank of Poland's total reserves, surpassing the 20% target Glapiński set in 2021. But as global uncertainty grows, economists reckon the National Bank of Poland shouldn't stop there.
Any move towards more stability and to higher resilience of National Bank of Poland is something that should be welcome these days, given this high volatility in the forex market.
But this begs a question. Should national banks continue to purchase gold if its price has gone through the roof?
NBP needs to be able to defend the value, the worth of Polish currency. It seems only logical that central bank invests in gold, in this safe and stable asset, which does not depreciate in the days of trade wars.
So it seems that for the foreseeable future, gold will be king.
So global markets can be volatile, emotional and unpredictable, or as Trump put it this week, a little yippee. And this week has definitely been a testimony to that. Much is unknown, but what we do know is what we've known for centuries. Gold is valuable and sought after as ever. I'm now joined by Piotr Arak, Chief Economist at VeloBank, to talk about gold and where it is heading. Hello and thank you for joining us.
Hi, pleasure to be here.
So, what is driving this increase in the price of gold? We've seen in the last few days, and especially these last 48 hours, a $200 increase in an ounce of gold.
I wouldn't say it's just the last couple of days. It's the last couple of years that increased the value of gold on the global markets. Do remember that before 2019, you could buy an ounce of gold just having $1,600. So half of the price that the ounce of gold has on the global market right now. So this basically the value of gold in the uncertain times of the pandemic, then of the war in Ukraine, the aggression of Russia, trade wars, which started with the second term of Donald Trump. This basically increased volatility on the global markets, and some of the investors are looking for safe havens in their portfolio. So it's not just the central banks that started buying gold before. That's what China did. That's what the Russian central bank did in order to have more value, more stable kind of assets in its helm. And this is also what the Polish central bank did before. But a lot of private investors are also looking for investment products which are connected somehow with gold. So hedging with gold investment funds.
Private individuals as well.
Yes, private individuals, private banking clients mainly, and a lot of investment banks are also having a chunk of their assets in gold. But do remember, gold is different than any kind of other asset. With stock, you can have dividends, you have value, you can actually borrow money for a company to grow. This is the purpose of the stock exchange, the value that we create with the additional investments. With gold, we just count on it to increase in valuation. So the worth of gold is going to increase in the years to come. If we're going to go back to more stable times, without this uncertainty, the value of gold probably is going to decrease.
But can you tell us a little bit about what has happened this week and perhaps in the last 48 hours?
Yeah, so 48 hours ago, we had the decisions made by the President of the United States to suspend the tariffs on basically everybody. So all the countries that did not decide to retaliate against the increases in tariffs caused by the President of the United States with an executive order on April 2nd.
And what does that mean for gold?
Yeah, and this basically took away a big chunk of money from the stock exchange in New York, and a lot of money went away from the assets that have been traded on the S&P 500. So of all the Magnificent Seven tech companies also that's seen increase in valuation to a more safe asset as, for example, gold. Because with the first decisions made by Trump on April 2nd, we saw decreases in value of gold.
Exactly. And it was quite a significant slump, wasn't it?
Yeah.
Can we bring up that visual, please? I just want to show our viewers what happened exactly. On the 2nd of April, that price of gold fell by around $200. It's that dashed line that we see. And then up until that point, actually, the price of gold increased, and then it fell. And then afterwards, it's rallied to that current level. Can you just give us a little bit of insight as to what is going on in the minds
I'll try to I try to interpret the data here. But what happened on April 2nd? So this was like turning point. So everybody thought that this is the end of days, like basically all trade is going to stop. So the markets typically have a lot of decisions made and margin calls made, because when you see a decrease in valuation, then further decreases are happening because somebody decided to put a price that he's going to sell if something's going to drop in the valuation at some point. This also happens to gold. So at the same stage, everything basically went down, aside of, I don't know, Swiss franc, some of the Swiss bonds, US bonds increase in the interest rate on the yield paid from the bonds issued by the United States government. So you basically saw erratic and emotional reaction caused by this shock, this increasing chaos on trade, which scared a lot of people, scared a lot of investors, also private ones.
So are you saying that the events of April are essentially more emotional than they are rational?
Yes, of course. So this is strictly connected. Of course, if the government, the U.S. government, would follow through on what they did, so what they announced they're going to do, so imposing actual tariffs which are going to have, I don't know, 40% on Madagascar or 20% on European Union, then it would be worse than it is right now. But currently we're trying to figure out where this all is heading. So we have increases in the yields of 10-year-old bonds issued by the United States. You have additional capital which is going away out of United States, decrease in value of the US dollar, still happening. So currently I think it's on one of the lowest levels to the Polish zloty.
Is that influencing the value of gold?
And this also means that a lot of those investors, which typically bought U.S. bonds, are thinking, okay, I need to put something safe in my I wouldn't say war chest, but this is kind of portfolio, which is under dire circumstances. So they're one of something which is more Trump-proof in terms of what's going to happen to the stock market in the next weeks, months, or even years, and some other decisions that could be seen as erratic, and then are going to cause additional decreases in value on the stock exchange.
I wanted to just move to Poland because the National Bank of Poland, we know, is the biggest buyer of gold in the world. Well, it was in 2024. We're looking at 90 tons. In 2025, it's purchased 50 tons, if we could just bring up a visual with that. And so far, we're looking at 500 tons of bullion, almost as much as the European Central Bank. And it started purchasing gold back in 2018. And I wanted to ask you, how did it figure out, if it figured out, to have a head start in terms of investing in gold?
I think it's connected with what's happening with the value of gold throughout time. So it also increased after the financial crisis. And this is also, if you read Adam Glapiński's op-eds throughout the years, he has this idea of gold being very important to central banks as an asset. So when he became the head of the central bank, actually everybody knew that he's going to probably increase the value of gold owned by the central bank. So less bonds, more gold. And throughout these years, which have been very, very chaotic, to say the least, the value of gold increased, and the decision that he made was good. Mm-hmm. That was a very good decision to increase the value of gold owned by the central bank, and then itself the valuation of gold owned by the bank increased.
He was keen to make up to 20% of the active reserves of the National Bank, and I think he's already hit that level. Do you think that the National Bank should carry on accruing more gold as the price goes up?
As long as the circumstances on the eastern flank of NATO are still as problematic as they are, so if we're still in a hybrid conflict with Russia, then probably yes. You're going to see a lot of uncertainty on the global markets, and specifically in the Central Eastern European region. So gold is still going to increase in some values with, of course, some slumps and then additional decisions or some Trump effects, most probably. But what could decrease the value of gold is the decision to have a stable environment. So no more war, no more additional crises, no trade war, no decrease in value of stock exchange in the U.S. I don't know, normal trade, but those days are gone. So most probably just the stabilization of the price is going to happen at some point because money is going to flow in a different direction. And do remember that that silver is increasing as well. So it's not only gold.
It's also a bit of a broader trend that national banks are investing in gold. I mean, obviously, Poland is leading the way in that sense, but we see that other central banks have been buying 1,000 tons of gold every year since about 2022. So would you say that this is a broader international trend, or it isn't common enough to be able to label it that way?
Yeah. As I said, so it's first off, this is the decision made by the heads of central banks, which expected their governments to cause crisis or do something like what Russia did, so intervene and start a war. So this is what happened. So Putin wanted to have a war chest, basically, and the additional number of gold that's been bought by the Russian central bank was needed for that. For us, as a country that could be hypothetically, but yet attacked, with increases expenditure on defense, with additional coordination with NATO, bordering with Ukraine and Belarus, with threats to the eastern border of the country. This is a very rational decision to increase.
So you would say that investing in gold is a good idea?
Yeah, it is. It is from the point of view of a central bank, from a point of view of an individual, if we want to increase the assets that we own, so buying products that are somehow connected with some of the value of gold. Yes, it does make sense in the current circumstances, but it might not be a long-term process. At some point, maybe the price is going to just stabilize and you're not going to see increases in value and no dividends paid. So
at some point, there has to be some correction to that price.
Yeah.
So what would you say are the benefits of investing in gold? I mean, Poles are very, I don't want to say that investing in real estate is their favorite way, but they feel most comfortable.
Risk averse.
Yeah, risk averse. I think that's the best way of putting it. But in comparison to real estate or cryptocurrency, and as you said, the value of silver is also on the rise. But, we're moving to gold, but what about platinum?
Platinum, for example, is not increasing. So this is something not...
Why?
Because the individual, so the consumer, does not have any emotional connectedness with platinum. Tutankhamun had his mask made of gold. We see that in TV. So it also has this intrinsic value for a lot of cultures that have been mining.
So basically, gold has been
centuries.
Marketed well.
Yeah. So it has better PR, basically.
Okay. So the demand for gold is on the rise, and in all likelihood, is going to grow. But it's not an asset that's readily available. I mean, it's not available in abundance.
Yeah. So this is something that is scarce as well. So this is why gold has been something connected with value. I don't know, the ancient Egypt side, for example. It's not able to fill out, 1,000 cities or something. Gold is extremely compact. We have scarce resources of it. Half of all gold that is being used throughout our civilization is in jewelry, for example. It's something that we know, something connected with us, connected with our family lives, for example. With inheritance or something. But typically, when an investor decides to buy something, they don't typically buy gold, but they buy, products, financial products, which are connected with the value of mines or companies that are connected with the gold market.
Okay.
So you don't have to buy, a gold-plated something to see increase in value in order to trade it. It can be just a financial product.
Okay, just as we wrap up.
Just as safe.
Okay, just as we wrap up, very briefly, I'd like to hear your thoughts on how high you think the price of gold can go.
So the investment bankers that I've talked with, and this is not investment advice, so said that the price could go as high as $3,500.
Okay.
So we went $200 just in a couple of days.
Yeah.
Probably we could also see a decrease in value of $200, but probably the price over the next year is going to increase.
Okay, Piotr Arak, Chief Economist at VeloBank, thanks for joining us again today.
Thank you very much.
And that wraps up the bottom line for this week. I was your host, Marie Cato. We're back on Monday and on every weekday at 5:10 CET on TVP World. In the meantime, for the latest in regional business, follow us on X and on tvpworld.com. And for more news and analysis, stay with us on TVP World. Goodbye.